How to prevent tax filing mistakes. The IRS could take money from you if you make a mistake on your tax returns. If the IRS finds out that you lied on your tax return, you could lose out on a larger refund than you expected, have to pay back more money than you expected, plus interest and penalties, or possibly face an audit. The most effective strategy for preventing such outcomes is to take preventative measures, such as filing your return correctly the first time. In today's video, we will find common tips for avoiding tax filing mistakes. Verify your numbers. The most common difficulty with tax returns is mathematical, although sometimes information is entered incorrectly even before any calculations are done. Consider the figures on your W-2, 1099, or other official tax documents. Please don't add or subtract zeros to round them off. When the IRS receives a copy of your tax return and these documents, it will use them to verify the accuracy of your return. For example, a red signal will immediately increase if you report $41,650 in income instead of $41,652. Be careful not to input $41,562 instead, as this will also cause issues. Validate all of the Social Security numbers you enter, including your own, your spouse's if applicable, and any children you claim as a dependent. If the information you input doesn't match what the Social Security Administration has on file, it will slow down the processing of your return by the IRS. It is imperative to use the correct spelling and name as it appears on each person's Social Security card. And finally, if you already have one, your baby's Social Security number. You need a dependent ID card before you may list any infant as a dependent. Don't run the risk of not getting your money back. If you've asked the IRS to deposit your refund directly into your bank account, check and double-check the account number and routing number before submitting your return. Most of the time, you will input your banking details at the end of Form 1040. The IRS requires you to submit Form 888 and your tax return if you want to split your refund among multiple accounts. While the form is quite straightforward, many people submit incorrect numerical information because of 3 different opportunities. A possible outcome is that they will forfeit your return. If your bank doesn't recognize the incorrect account number, it will return the funds to the Internal Revenue Service. They may significantly delay your payment, but you will receive it eventually. You'll be relying on their good faith if your return is transferred into someone else's account. They might pocket the cash instead of alerting the bank to the error, and the IRS won't give you another refund if that happens. The IRS will reach out to the bank on your behalf once you file Form 3911, but they cannot force the bank to comply. If you're enjoying this video, please hit the like button and subscribe to our channel if you haven't yet to show your support. Now let's continue. Don't forget to include every penny you've made. Almost every cent of your earnings is subject to taxation. You still need to record the income even if you didn't get a W-2 or 1099 for the money. Some taxpayers may be caught off guard, especially if they receive a bonus or windfall during the year. Even if someone paid you $50 cash or $75 in wine to fix their faulty computer, you're still legally required to file a report. Don't count on getting a 1099 NEC form from a company if you're an independent contractor or freelancer and they pay you $600 or more. It is essential to keep accurate records throughout the year to know exactly how much to claim on your taxes in April. Also, it doesn't matter if the total amount is more or less than $600. You still have to disclose it. It is a common blunder when calculating returns and is especially perplexing when considering investment income. Use tax software. If you try to file your taxes on paper, you're more likely to make mistakes, says the Internal Revenue Service. Tax preparation software, or an IRS e-file, can increase the likelihood of a problem-free return submission. These tools guide you through the tax preparation process by asking questions and using your responses to evaluate your eligibility for various credits and deductions. They can help you decide whether it is more beneficial to use itemized or standard deductions. Be sure you sign in the spaces below. It is less of an issue with electronically submitted returns, but it is surprisingly common with paper forms that people neglect to sign. Correct tax filing requires a signature from you. Remember that putting your signature on Form 1040 isn't the only requirement. A return may need the submission of supplementary schedules and forms, many of which require your signature. If you forget to include this information on your tax return, the IRS will not audit you unless there is evidence of fraud. A letter from the IRS will arrive in the mail and it will get your heart racing. Avoid unnecessary stress by double-checking all of your signature lines for this easy remedy. Don't forget to include a return date. If your financial position is exceptionally complex, you might want to hire a professional to help you file your taxes. There will be much less room for error if you get some professional assistance. Well, that's all for today's video. Tell us in the comment section how this one was. I hope that you found this video interesting. If you want to see more videos like this, please consider subscribing for more. And don't forget to give comments and provide us with your valuable feedback. We'll see you in the next video with some more interesting facts and stories. And until then, stay tuned.